Now for a closer look at that market action, Louis Storm from Vega Capital joins me now. Thank you so much for your time, Louis. Quite interesting moves that we are seeing on that front. I was on leave yesterday, so I didn't really see the knock that the rand took yesterday. I'm coming back because when I left, the rand was around 18 rand 20, but clearly it experienced a lot of pressure, and now it is back around those levels. Quite a lot of strength there, by almost 1.5% against the US dollar. What have you made of trading, and just really what the rand is digesting at the moment?
Oh, firstly, thanks for having me. So basically, it's been quite volatile. We've been very positive when we heard the GNU is finally happening, and now it looks like it might all fall apart. So that's basically what's being priced in at the moment. The DA must decide if they're happy with the negotiations, which obviously they're not. So yeah, that's what we have to see, and that's the risk that is currently being priced in. We also saw Bank of America releasing a statement, which basically they say it's much more risky than we are currently pricing in the GNU negotiations. So I think for good reason the rand has depreciated a bit.
Yeah, it seems all the gains that we have experienced really could just be wiped out with a stroke of a pen. Something that isn't being wiped out, also the financials, you are seeing them, they're trading very, very strongly, surging almost 3.5%. Is that just a function of what the rand is doing, and also maybe just signaling that there is still a lot of value in our banking sector in South Africa?
That's true. The banking sector is trading at steep valuations still. So, I mean, if we were to see a favorable decision coming from the GNU, then obviously there is some upside in the whole market, but especially in the banking sector as they're trading at steep valuations.
All right. Well, let's take a look at some of the company action, specific company action that we have seen on the JSE. We have seen investors plowing into Nampak today. Last time I checked, it had surged about 6%. And of course, it released its interim results today, recording their revenue growth of 7%, close to double digits. But also swinging from a loss to a profit. I think they had actually guided the markets pretty well before the final results were out today, and we did see a lot of optimism there coming from investors, but seeing that markets even liked the final results even more. Talk to me about those numbers there, but also really the market reaction as well.
Well, they've had some tough times. I think it's just a lot better than expected. The results are looking good. Obviously not brilliant, but are looking quite good, and the market didn't expect it to be this good. So for that reason, obviously, it suits me well. The share price moved a lot. As you mentioned, revenue increased by around 7%, so which is good. But I mean, you also hear the same theme as with the other businesses, with high inflation and high interest rates, really making it difficult for them at the moment. So it's not a wonderful environment for them to do business in.
Yeah, and just talking about the kind of environment, of course, we are in an environment of a relatively strong rand. And I'm wondering if we can maybe just expect some pressure for a while from the rand hedge stocks. For example, something I noticed today was Richemont. It was down about 2%. And it actually wasn't the first trading session in which Richemont was down quite significantly. Would you say that that is a function of what is happening in the rand, the pressure that we are seeing in stocks like Richemont, and maybe it could provide an opportunity for investors to kind of nibble into?
That's because the rand hedge stock, it's basically also obviously a function. If the rand does strengthen, the stock does lose value.
Yeah.
But also a stock like Richemont has a lot of exposure to China, which with the recent sanctions on Europe, obviously Richemont and companies like LVMH felt the pressure. So they're obviously experiencing pressure from sanctions as well, or expected sanctions in the future. So that plays a massive part as well. But that is to your rand hedge stocks will obviously be under a bit of pressure, especially the at the moment, most of these stocks are on their highs. So I mean, they won't experience much more share price increases. It will have to come from a US dollar weakening.
All right. And knowing just also some other news that investors will be chewing on today includes the PCE inflation print for May in the US. What do you make of, just how markets are trading before that and really what they are expecting and pricing in there? Of course, you know that is the Fed's preferred measure of inflation, something that could influence the direction of monetary policy.
No, that is true, and this is obviously also one of the biggest, will have the biggest influence on share price movements as well, in the shorter term. So the expectation is a 2.6% increase in PCE annually, and basically a flat month-over-month increase. So that's the expectation. We will see later on if that is correct. If it's better than expected, you could obviously expect share prices to increase a bit. Other way around, I think there is some downside, especially with share prices performing so well over the past 12 to 18 months now. So there will be some pressure on the PCE figure.
All right. And of course, we will be sifting through what markets are pricing in later on in the day in terms of when we could start seeing interest rate cuts. Louis, before we get to your stock pick, I'd like to head over to the counters that have found favor with some of your industry peers.
Very easy to get exposure to. I mean, honestly, in South Africa, you can just buy the Satrix S&P 500 or whichever you prefer. As you say, and globally, there's even more choice. The fact is, we've seen the market breadth improve with the strong run that we've had in the tech sector. That's sort of showing signs of being quite hot at this moment. It's better to have a broader market breadth, and that's why we like the exposure of the S&P 500. We also still think that the US economy is the most possible one to come out stronger than the rest in the next 12 months. Also, the fact is that when you look at the funny maths of investing, if you invest at market highs, you actually have a better chance of doing well in the next 12 months.
We're all preaching from the same book at the moment because that's the exact reason why I'm choosing Amazon. As you know, I wear two hats, technical analysis and fundamentals. Amazon is at a new high. And when that happens, the technical picture looks that positive. One has to, I think, go and take a look as to why one should not invest rather than why one should invest. And I cannot find any reason not to invest in Amazon, whether it be the fact that I think their price is 3 times, or forward sales is 3 times price. I think their web services is a very nice growth vector, and the technicals look good. And at a 50 PE, they've got to grow their earnings, between 15-20% a year for a while, which I think they can do. So, yeah.
I'm going for the UK and JSE listed retail REIT, being Hammerson's. And Hammerson's, it's a business that I think was very prominent a few years back. But I think a lot of people have forgotten about it. It's been through the wars the last few years. Not just COVID, even before COVID, it was suffering from an oversupply in the UK marketplace, oversupply of shopping centres. And they had to do a rights issue, they had to dispose of assets to try and shore up their balance sheet. But it now seems like the balance sheet is in a stable position. They no longer need to dispose of, they're not inclined sellers of assets. And their operating results are moving in the right direction. They're increasing their rentals and generating more cash, and they're paying out a dividend, and it's fully cash backed. And it seems like there are some catalysts possibly heading their way. Lighthouse is a significant shareholder that has decided they don't want to be a significant shareholder anymore. And they've been selling their shareholding in Lighthouse through the market. They're now below 5% of the shares outstanding, down from over 20% last year. So it's a significant block that's been sold. And then there's also the possibility of Hammerson selling their stake in Value Retail, which would lead to a significant amount of cash coming into the business and really completely transforming the balance sheet of Hammerson. So it still looks it looks on the cheap side. We think that the worst is behind it, and there's some optimism on the horizon.
Well, Louis, your thoughts on these picks? Quite interesting that people are still going for the S&P 500, even though it has had quite a run due to the tech stocks, but also really quite interesting the kind of rotation that we also saw earlier on in the week. What do you make of the S&P 500 as a buy?
Yeah, we also bullish on the tech sector as a whole. Obviously not too much overweight, as the sector has run quite a bit. But if you just look at the companies, for example, the Magnificent Seven, they are trading on massive operating margins. They really do have a competitive advantage. The expected return and expected growth forecast for the next 5 years is incredible. It's much better than anything else that you can buy in the market. So from a valuation standpoint, we don't think it's expensive, even though the share price has done quite a bit.
All right. And then what about Amazon? And quite interesting that Rikus chose this as it's reached a new high.
Well, it's very much the same theme as the rest of the tech sector. Again, does definitely have a competitive advantage, especially and now with AI and data centers taking off. They've got the cloud computing business doing exceptionally well, growing at a massive rate. Between them and Microsoft and Google, basically have a monopoly on the cloud computing side. So a lot of growth and good margins. I mean, it's never too late to buy Amazon.
All right. What about Hammerson? It has had quite a wild ride, and actually even over the last 2 trading sessions, because yesterday I see that it plummeted 14%, but it has actually made back the losses from yesterday, now up about 15%.
Oh yeah, most beats are trading at like between 20% and 50% discount to their net asset value. So they are trading at cheap valuations. They haven't returned much over the past 5 years. So they are slowly recovering from the COVID slump, and there is some good value in the sector as well. So we are starting to look into that as well.
All right. Well, what else are you looking into your stock pick for today?
It's smart infrastructure. So basically the global movement is towards, well, data centers, green energy, and so on. So companies that geared towards that sort of thing, like Emerson and Siemens and Eaton, those sort of companies could get large government contracts, which isn't so much connected to the GDP growth or to the general economy. So we feel that especially in the next year, where the economic growth could be quite volatile, we prefer companies with solid long-term contracts, not linked to that.
All right. Well, thank you so much for your time and for your insights on what is currently moving investors' money in this trading session. That was Louis Storm.